Hello, and you're welcome to Global Business Insights, where from a global perspective we discuss insights, ideas, and answers to questions in the fascinating places where business, finance, and life meet. Technology stocks picking up some steam as the Nasdaq Composite was gaining after lagging behind the major indexes earlier in the morning. The third quarter 2024 earnings season is going to get underway, launched as usual by the earnings reports from the big banks. That's on Friday, and tomorrow, Thursday, the September U.S. Consumer Price Index (CPI), that's inflation data, will be released. Meanwhile, Chinese stocks earlier suffered their biggest drop in more than 4 years as traders grew impatient over the pace of Beijing's stimulus measures, and weak holiday spending data was also hurting sentiment. Zijin Mining Group company has bought the Arcadium gold project in Ghana, owned by US-based Newmont, for $1 billion in cash as the state-owned firm looks to add resources to meet its aggressive output targets. The transaction still requires regulatory approval and is part of Newmont's effort to raise $2 billion in the wake of its acquisition of Newcrest Mining Limited last year. The implementation of a $9.3 billion climate finance pact between South Africa and some of the world's richest nations has been slowed by the absence of investable projects. The Just Energy Transition Partnership, a unit in the presidency, plans to unveil a platform to nurture projects later this month to help speed up progress, according to Joan Yavich, head of the project management unit. The U.S. Department of Justice has made recommendations for Google search engine business practices, including a possible break-up of the tech giant as an antitrust remedy. This was after a U.S. judge in August ruled that Google holds a monopoly in the search market. Last week, U.S. port workers reached a tentative deal, including a 62% wage hike over 6 years, ending a 3-day strike that shut down shipping on the U.S. East Coast and Gulf Coast. In another development, Boeing yesterday said it had withdrawn its pay offer to around 33,000 U.S. factory workers, and no further negotiations were planned with their union representatives as a financially damaging strike nears its fourth week. We will discuss some of these labor issues, which I think are set to resurface as we draw the curtains on 2024. In Africa, there is major evidence of economic progress from major economies like South Africa and Nigeria as macroeconomics trend positively, but no obvious game changer in sight to avert a still tepid growth for 2024. Nigeria is moving more boldly to deregulate downstream as it expanded tax incentives to give a much needed boost to the oil and gas sector. However, the issues in the Nigerian oil sector are considered to be structural, even though stopping the bleeding as we see happening will certainly help. Capital importation into Nigeria from data released yesterday declined by 22.85% quarter-on-quarter to $2.6 billion in the second quarter of 2024, down from $3.37 billion in the first quarter of 2024. First, we look at crude oil prices expected to see increased volatility in Q4, as many factors could upend projections. Traders still uncertain on how the Israel-Iran situation will develop, as major supply disruptions have not materialized. If no major supply disruptions emerge and no large-scale strikes on Iranian oil infrastructure happens, WTI and Brent could slip further, with Brent going under $75 per barrel. Other factors to watch in Q4 include how much Libyan supply come back online, and of course OPEC production discipline and what happens with Chinese demand. Also weighing on prices, crude oil inventories in the US rose by 10.9 million barrels for the week ending October 4, according to the American Petroleum Institute. Analysts expected a build of 1.95 million barrels. Other market-moving news include UK oil major BP is set to abandon its 2030 target of cutting oil and gas output by 40% under new CEO Murray Auchincloss as they look to new upstream opportunities in Iraq and Kuwait. Shell has won a major bid for the shallow water Block U in Trinidad and Tobago, beating BP and EOG Resources for the presumably gas-rich acreage. Like I had said, Trump's plan to reduce energy prices by 50% will have to contend with market forces as investments in more expensive to produce US shale is likely to be held back by weaker economics. OPEC and Arab producers have the advantage of lower cost of production. On prices, yesterday benchmark Brent crude fell 5.4% to $76.56 a barrel after rising by 10% in the 4 trading days following Iran's missile strike on Israel. That was on October 1. Today, slightly higher in early morning trade at over $77 a barrel for the Brent standard. And in the US, the deal with the union ends the biggest work stoppage of its kind in nearly half a century, which blocked unloading of container ships from Maine to Texas and threatened major shortages, triggering a backlog of anchored ships outside major ports. Meanwhile, the striking union of Boeing's West Coast factory workers is seeking a 40% pay rise over 4 years and restoration of a pension-related benefit that was taken away in the contract a decade ago. There are 2 broad issues at play here. First is the recent unanticipated inflation, which has eroded earning power, driving a call for some compensation for much higher erosion of earnings unforeseen in previous negotiations. Second, for port workers, is the issue of automation, artificial intelligence, and improved productivity, which certainly will threaten jobs. The present trend is that of high staff mobility as companies intensify people care to hold on to talent that they must have. My sense is that the macroeconomic instability has put unions at a disadvantage with their fixed long-term contracts. Workers are increasingly better off by reskilling and entering more flexible, more dynamic non-union wages environments. Automation is a more complex, inevitable development. Workers need to be carried along, making them more aware and knowledgeable on the changes that are coming. Re-education and retooling should be more proactively addressed, and unions can demand for more comprehensive approaches to reconfiguring the workforce, rearming workers with new competencies as much as possible. Then, of course, the trust deficit post-COVID cannot be allowed to expand. People must be carried along on the change trajectory ahead, with more transparency on which jobs will be affected and the options to minimize the pain of impacted workers. Organizations should not underestimate workforce adjustment costs as they move aggressively with digitization and plot major productivity overhaul leveraging AI. Already, AI assimilation implies more upfront costs, tempting companies to underestimate the added costs for people-related investments. Capital importation into Nigeria declined by 22.85% quarter-on-quarter to $2.6 billion in the second quarter of 2024, down from $3.37 billion in the first quarter. $2.6 billion in the second quarter is, however, a robust increase of 152.81% year-on-year compared to $1.03 billion in Q2 2023. A detailed breakdown revealed that portfolio investment inflows was $1.4 billion, accounting for 54% of inflows, followed by other investments that came to $1.17 billion, accounting for 44.9% of inflows. Foreign direct investment, which has the strongest correlation with economic growth, showed a paltry $29.83 million inflow when you look at capital importation in Q2 2024. This trend reflects the challenge for Nigeria in attracting attracting needed long-term capital to drive sustainable economic growth and job creation. President Tinubu, in his last Independence Day speech, had said the economy is undergoing the necessary reforms, and according to him, foreign direct investments worth more than $30 billion came in the last year. The data we suspect the president is referring to must refer to commitments as opposed to actual inflows. The FDI data of yesterday points to a significantly lower figure and shows little changed in terms of FDI. In contrast, South Africa recorded FDI inflows of 24.4 billion rand, that's $1.34 billion in the first quarter of 2024, up from a revised 2.5 billion rand in the previous quarter, and easily more than 40 times higher than FDI importation into Nigeria. To put it plainly, Nigeria has to attract significantly higher FDI, improving attractiveness factors like infrastructure, macroeconomic stability, and security, noting that portfolio investments are more volatile. The world's largest second miner, RioTinto, said today that it will acquire U.S. lithium producer Arcadium for $6.7 billion. The deal would be an all-cash transaction for $5.85 per share, also a premium of 90% to Arcadium's October 4 closing price of $3.08 per share. European markets traded slightly higher with a still shaky positive sentiment spurred on by volatility in China. US stocks rose for a second day, helped by rallying tech stocks, with the S&P 500 up to a new record also as investors shook off geopolitical concerns. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Again, thank you so very much for watching. Bye-bye.